Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's time for Krispy Kreme earnings, ticker symbol DNUT. We've got double earnings today. We have two earnings back to back. We have DNUT first, Krispy Kreme, followed by Venom, Viper Energy. These are requested by our members. So if you are a member of our channel, and you do a $5 super chat, you can get me to do a promotional video and an earnings call like this to cover your favorite stocks. That's what we're doing this morning. So welcome everybody. We've got 20 minutes before the call begins. So we're just waiting. That's the live clock on the screen you see there, 8 minutes past 7 Central Time. That's what that's there for. So you always know the times of the events. And this is great. As you can see, Krispy Kreme is down this morning. There's lots of volatility at the moment in the markets. I can report that. So let me just have a look. Where is the call? Let's see. Okay, we've actually missed on earnings. It's a huge miss, actually. Estimated 10 cents a share. They made 1 cent a share. It was pretty bad. To be honest with you, they're still making money, but only just. This company are not doing so well right now. As we can see, the stock price is down 12.38% as well. So quite a drop this morning, I think you'll agree. And we've got 20 minutes to go. Welcome, everybody. We've got Rallo1. Thank you for the earnings, Martin. My pleasure. Was this your one? Was it your request? Thank you so much indeed. You're welcome, Rallo1. Hi, Mike. Mike, good morning to you. How is Lisa this morning? Lovely to have you here. Welcome, 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 Krispy Kreme. Plus, we have coming up Viper Energy. That comes up in 2 hours' time. Follow this earnings call. Another one requested by you. And on top of all of that, we've also got a world premiere, the build-up for Archer Aviation earnings on Thursday, part 2 and part 3 of Vaz's videos as well. The EVTOL hub, really enjoying the EVTOL hub from Vaz. It's getting better and better every time he does one, and it's really great to be part of the journey with Vaz. So that's coming up in a minute as well. All right, now then, as we wait for Krispy Kreme, we've got another 4 minutes before they refresh their screen to give me the link. You don't get it in its entirety until 15 minutes before the call. Let's have a quick look at the figures themselves. DNUT, Krispy Kreme. We can do it for 2 ways, and I'll bring it up for you now. DNUT. Krispy Kreme. If you like my software, it's below in the chat, in the description, but also there it is in the live chat for you. There is the Krispy Kreme. It should pop up in the chat. Did that not come up in the chat? What's going on there? I wonder if we got the right stream. Hang on a minute. Okay, that's peculiar. That should be sharing on the screen, but it's not. Let's try that again. What's going on? Huh. Okay. Not showing on the screen. It should be. I have no idea why that's not happening. I should be sharing some links on the screen for you. Let me have a quick look at what's happening this morning. Why isn't that sharing to you? Martyn Lucas Investor, yeah. It's the right channel. Well, that's peculiar. Let me open and close my stream deck, see if that changes it. Okay, now I'm riding without any control for a moment, but let's see if I can get this back. I just sent you some links on the screen, which you should have received, but it didn't come through. So I'm reloading my stream deck. Keeping my fingers crossed it will work this time. and still not. No idea why that happened. Anyway, okay. It sent it to the extra. Oh, no, that's okay. I was just thinking for a minute. So the extra channel's working. So the stream deck's working, just not to the main channel. Okay. All right. Well, that's wonderful. That's what you need. All right. No reason why not. It's not recognized this as a stream. All right. We'll carry on. Not to worry. Just had a question in the chat from one of our members. Hi, Mike. Old me. Is it a buy for space today? Well, we've got 15 minutes before we go into Krispy Kreme. So I'll answer your question. Is it a buy for space today? Well, that depends on your level of risk management. It's another all-time low. Rates for longer. Economies struggling. It all comes down to your belief. There's no way to measure it. It's whether you think they're going to get the job done. There's no issue so far. We do have an earnings for space on the 28th. I would rather wait until the 28th and know what the situation is before I'd buy any more here. I'd like to know what's going on with the company. But anyway, that's my thoughts. Until the earnings, you don't really know and you can't really guess. So I think the earnings are important. Right, let's have a look at Krispy Kreme. We've got 15 minutes ago. We'll have the information up in a moment. Seeking alpha analysts, buy. Wall Street, buy. Quant, sell. Quant, sell. So I would go to sell or hold, be honest with you. Seeking alpha analysts, they're paid to say these things and they're self-interest, so that's no use. Wall Street, they're saying a buy, but the AI software with no emotional attachment is saying a strong sell. Valuation, F. Expensive, doesn't make any money, not much now. Growth, A. D plus for profitability, it's awful. Momentum, D. Revision, C. Not looking good. Right, now I should be able to refresh my screen and have the event available to me. So let me see if I can get it. Here we go. So I'm going to just mute the audio for a second, refresh the screen, and this is the Krispy Kreme earnings. Play. Mute the music. Okay. We're all good. I've got the music up. I'm playing it. I just want to mute it for a moment. This is the event. This will start in 15 minutes' time. So you've got it all in the right place. So welcome, everybody. And we're all good to go. I'll bring it to you as soon as it begins. All right. So welcome, everybody. This is the Krispy Kreme earnings. Welcome. Good morning to you. Lovely to have you here. And welcome. So we're just waiting. It is a green day today. I bought a lot of the S&P yesterday, 35 shares of the S&P over the last couple of days. So I don't need or want to buy any more. But if it goes down, you dig the ditches. It's what you do. But it's all about risk management. We're up today. Once the markets start to go up, I'll go up very, very quickly, because you can see if we look at today, it's more than double now. If we look at 0.1 of the S&P, I would be up 0.2 if I was 50-50. So the more margin I use, then the more it'll be amplified either way, up and down. So 0.2 would be 50%. Sorry, 0.2. All right, 50% would be 0.2. So look at 0.1 now, and then you go today and you see I'm up 0.19 right there. So there you go. That's how it's double. Okay. So there you go. we'll keep our eye on that today. Krispy Kreme, welcome in. Who have we got this morning? Good morning. Hi, Mike. Hi, Rallo. Evening, morning, people. Good morning. Good morning. Listing Win. Good morning to you. I saw your trading view on Discord. Thanks for sharing. Good morning, everyone. Offer an evening walk. Listening to Martyn. Nothing better. Oh, wonderful. Listing Win. Thank you so much indeed. Big Mike. Listing Win. What's your opinion on Zotis stock? Pedro, I've not looked at the stock. If you become a member of the channel, I can cover it for you. But I've not covered that stock, not reviewed that stock, so I honestly don't know the answer to that question. What's your opinion? Answered that. S&P in the UK still going wrong way. Don't know if that's indication if what's going to happen in the US. Kozensky, which S&P in the UK do you use? Which one do you buy? Which ETF do you buy in the UK? I'm interested. Good morning. James Owens, good morning to you. You are a new member. James, you got a green badge. Once you turn that badge blue in 1 month, if you renew your membership, we can upgrade you for all the free training on Discord. GJ Hayes, hi everyone. Welcome to you. "14 minutes before the call begins. And then we go straight into Viper Energy. We've got 2 back-to-back earnings. Plus we have a world premiere from Vaz today as well. So a lot going on. Right, let me share with you on the screen your votes. You've been voting on DNUT, Krispy Kreme. Let's have a look. This is what you voted. I asked you, is it a buy, hold, or sell? You are saying it's a buy. 31% of you say buy, 25% say hold, sell, 25, undecided 19. All right, if you'd like to vote, there's 109 votes. It's quite popular. So here is the event. I'll put it in the chat for you right now. There you go. It's in the chat. 10 minutes to go. Viper Energy coming up straight after this. We're getting closer and closer to that 70,000, 80, 90, and then the countdown begins to 100,000. 69,693. We've been quite slow the last couple of weeks. It's, last couple of weeks, couple of days, I meant. Slowed down a little bit. Our rate has gone a bit quiet. It's because the markets are red and people aren't investing right now, which is the backwards way of looking at things. People should be investing more. It's hard when the markets are red, but these are the times when you go to work, not when it's green. You don't do anything, but that's the opposite of what people do. So I know I'm doing the right thing by digging the ditches when it's hard. DJ Hayes, SPX5. Ah, okay. I'll take a look at that. Is that available on Robinhood in the UK? SPX5. Alternative to S&P. I'll take a look at that. SPX5. Not heard of that one. Good morning, Stanislav. Good morning to you. Welcome to you. Lovely to have you here. Thank you for everything. Stanislav, I've got time to talk to you now. So I've got 8 minutes before Krispy Kreme starts. You're originally from Ukraine. I wanted to tell you something, didn't I? So a few years ago, 3 years ago, in fact, when the war started, I started going live on my music channel every day at midday, which would have been 9 o'clock in the evening in Ukraine. And I did it every day for about 2 months. I thought the war would be over quite quickly. However, of course, we now know that never happened. So I couldn't do it every single day. I was doing it every single day for a couple of months. And what I was doing was just singing songs, entertaining people, and just sharing our good thoughts for everyone. Just to say, we are supporting everyone. We're here for everyone, and all the rest of it. So every day I would go live and sing songs and offer hope and support for everyone. And one particular day, this is why I wanted to share this with you, because you are from Ukraine. One particular day, I was doing a concert, and somebody from Ukraine called in. They were in the chat, and they said, we just wanted to let you know that we are sitting here every day listening to your broadcasts, and we really do appreciate it. And they said they were in a bomb shelter underground while they were being bombed, and they were down there with children, families, their dogs, their cats, their pets, and they were down underground hearing all the explosions and all their homes being destroyed, set on fire and blown up. And they used to say, we really enjoy your music and we're listening to it every day. And they called live into the show, and they said, we were able to get your broadcast and we were able to listen to you due to Elon Musk's Starlink that he dropped in, so people could actually tune in to get Wi-Fi. So I thought I'd share that with you, as you are originally from Ukraine. Quite a special moment, I think you'll agree. Live on my show, I'm singing Everybody Hurts, Amazing Grace. I'm singing all kinds of supportive, emotional songs. And there we are with an audience watching us in Ukraine every day in their bomb shelters, saying we're all being bombed and killed, and we're here listening to you every day. So I thought that was quite a special moment I wanted to share with you. So that's what I wanted to tell you. I can hear some music. And, there we go. I thought that was strange. Right, I could actually hear music. It was Krispy Kreme's earnings. Yeah, they've got some music, but it was muted. That's okay. Looks like they've got a presentation today, which is nice. Now, I know that doesn't look very healthy, but it looks tasty, right? Probably shouldn't eat it, but it does look tasty, though, doesn't it? Doesn't that look nice? Anyway, that's coming up in 4 minutes' time, Krispy Kreme. Let me read more comments. Who else we got here? Let me have a look. Good morning. So there you go, Stanislav. That message was for you. Morning. Sorry for being stupid, but I can't find your Ondo analysis recording anywhere. Steve T. I will do it again for you. It was done in a live stream. There wasn't very much to it because there wasn't a great deal of information on it. But because you are a member of our channel, Steve T, how long have you been a member now? 1 month. There you go. I will. Let me make sure I've got it on the list again. There you go. I will do it for you again. It's not that much. There isn't much information on it, I'm afraid. It's a very limited stock. There's a very limited information on it. It's not widely known. It's a very little information. But I will do something for you again. All right, Steve T. So look out for it, and I'll make it its own video this time so you can find it easier. Sorry, it was built into a live stream. That's why it's hard to find it, I understand. Okay, high listing. We got 3 minutes to go. Why aren't you following SMCI today? Why am I not following it? Well, I've got to focus on the members, Julio. You're not one of my members to the show. SMCI isn't doing an earnings today. It isn't even doing an earnings at all. It did a preliminary meeting and it's missed its earnings again. So, and I've got to focus on the members' requests, I'm afraid. Hi, Kazansky, and this is what I've been asked to do. Krispy Kreme, followed by Venom Energy, Viper Energy, followed by a world premiere for Archer Aviation. These are all requests from members. If you become a member, then I can do your request, right? Is PepsiCo a buy? Old me. I've not looked at it recently, but it's a solid business we like to own. Like, I prefer Coca-Cola, by the way. Cannot buy an ETF on Robinhood UK at the moment. Yeah, I noticed that. I've got Robinhood UK. I can't either, but I was wondering what you're buying. So you're buying SPX. Is that on Robinhood, by the way? Your SPX5, is that on Robinhood? Hi, Mike. Stanislav, I friend requested you on Discord. Hi, Stacy. Hi, Mike. Stacy, good morning. I think Krispy Kreme will go private again. Much appreciated. You're welcome. Yes, me too. Since the war began, we've been in a shelter, only able to work. Our kids were born in Odessa during the active war. Thank God all is well, and thank you for your support. There you go. It was an honor, really, to be able to do something like that. Don't get donuts, chocolate, yes, but donuts are sticky, are sickly. Hello, everyone. Halid. Okay, we got 2 minutes to go. All major banks that had major losses last year are required to be on the Ripple ledger and transition digital currency. Okay, we know all about that, Stock Hawk, but we can't verify that information, of course, because you're not a member. Black Wolf Investment Group, CCL. Carnival Cruise Lines. I worked on all Carnival Cruise Lines, every single one. You want to know about Carnival Cruise Lines, the inside, how it works? I can tell you how it works. All right, I've been there. Is HIMS a buy after this fantastic earnings report? I never covered earnings for HIMS. No one requested it, unfortunately. So I don't know. I've not looked at it. You will hear about the news after the moves. Stock Hawk. I'm sure we will. However, thank you for letting us know. Hi, Martin. Patrick Blatt. I use Trading 212 for ETFs. Ah, okay. Fair enough. Fair enough then. Okay, here we go. Krispy Kreme. There's the audio. There's the audio. They're playing for us. We're listening in. We're just waiting now. The moment it begins, I'll bring it to you. Stand by. 2 earnings this morning, Krispy Kreme, and then Viper Energy, VNOM, VNOM. These are your requests.
Conference operator today. At this time, I'd like to welcome everyone to the Kreme fourth quarter 2024 earnings call. I would now like to turn the call over to Dre Eldridge, Krispy Kreme Investor Relations. Please go ahead.
Thank you. Good morning, everyone. Welcome to Krispy Kreme's fourth quarter 2024 earnings call. Thank you for joining us today. We will be referencing our earnings press release and presentation during the call. These are available on our investor relations website at investors.krispykreme.com. Joining me on the call this morning are President and Chief Executive Officer Josh Charlesworth and Chief Financial Officer Jeremiah Ashukian. After prepared remarks, there will be a question and answer session. Before we begin, I would like to remind you that during this call, we will be making forward-looking statements pursuant to the safe harbor provisions of the Private Securities Litigation Reform Act of 1995, including statements of expectations, future events, or future financial performance. Forward-looking statements involve a number of risks, assumptions, and uncertainties, and we caution investors that many factors could cause actual results to differ materially from those contained in any forward-looking statements. These factors and other risks and uncertainties are described in detail in the company's Form 10-K filed with the SEC and in the other filings we make from time to time with the SEC. Forward-looking statements made today are only as of today. The company assumes no obligation to publicly update or revise any forward-looking statements except that may be required by law. We will be referring to non-GAAP financial measures. Please refer to our earnings press release and presentation on our website for additional information regarding those non-GAAP measures, including a reconciliation to the closest comparable GAAP measures. Jeremiah will take us through our financial performance in a moment, but first, here's Josh.
Thanks, Dre. Good morning, everyone, and thank you for joining us. We delivered our 18th consecutive quarter of organic sales growth, despite the cybersecurity incident we disclosed in December. I want to take a moment to thank our hardworking Krispy Kremers for their resilience through the disruption and acknowledge their unwavering dedication to our customers. As I reflect on 2024, I'm pleased that we delivered 21% revenue growth in our expanding U.S. delivered fresh daily network and surpassed $250 million in sales for the first time through this channel. We're now operating in 40 countries around the world with an established pipeline of franchise market growth. We also reached several strategic milestones in our transformation to becoming a bigger and better Krispy Kreme. We simplified the business by divesting a majority stake in Insomnia Cookies. We added national distribution partners in the U.S., and we restructured our management teams to fully focus on our largest growth opportunities, profitable U.S. delivered fresh daily expansion, and the wider adoption of our capital-light international franchise model. Our transformation continues in 2025 with clear business priorities that are rooted in our strategy. We are spotlighting our core offerings. Our focus is on growing with national distribution partners. We expect to soon award contracts to outsource U.S. logistics. We have begun a process to evaluate refranchising certain international markets, and we are strengthening our performance-based culture. Now I will walk you through these priorities. Our iconic brand is a distinctive and undeniable asset, delivering more than 100 billion media impressions last year, far more than businesses of a comparable size. In the fourth quarter, our team boosted consumer engagement with creative marketing, particularly through a viral Grinch video series promoting our Grinch Christmas specialty donut collection. And earlier this month, our Valentine's Day collection led to the biggest U.S. retail sales day ever. This buzz not only creates awareness among Krispy Kreme fans, but it converts to sales. To maximize this conversion in 2025, our most beloved and affordable original glazed donuts will get the spotlight as we evolve our marketing efforts, simplify pricing, and focus on value-conscious consumers who we know are under pressure. For example, we plan to bring everyday value by offering additional savings for purchases of 2 or more dozen. Although we will offer fewer days overall on discount, we will use meaningful discounts to drive demand on days like National Donut Day that we can turn into buzzworthy events. We continue to expand availability in 2024 as we grew global points of access by 24%. In the U.S., we added more than 2,800 new doors with national partners such as McDonald's, Kroger, Publix, and Target, who are eager to expand with us nationally. Internationally, company-owned points of access also increased 14%, driven by Australia and Canada. This very morning, we launched daily deliveries to approximately 500 McDonald's restaurants in the greater New York City area and remain on track to reach about 6,000 restaurants by year-end. In 2025, we expect to continue our U.S. expansion with national partners, both existing and new, for example, Costco. An added benefit of this expansion with national partners is the opportunity to identify and close existing underperforming doors, which we expect to do in 2025. While much of this growth is enabled by existing capacity, growing into new and underserved geographies will be supported by adding hubs with spokes, of which we now have 158. We expect to build 5 to 7 of these in 2025 in areas like Minneapolis, keeping our expansion on track. Through this growth, we will increase donut volumes at existing production hubs, which is expected to improve productivity and profitability. As we become bigger, we must also become better. We are addressing the increased complexities that accompany growth by simplifying the businesses, focusing on what we do best, making donuts. Our recent pilots confirmed that third-party logistics achieved excellent service levels and provided predictable logistics costs. We expect to soon award contracts to several national and regional carriers to outsource U.S. logistics. We are aiming to outsource more than half of our DFD deliveries by year-end. Our most profitable, capital-light international franchise business grew points of access by 8% in 2024 as we expanded in markets such as France and South Korea. For example, our franchise partner in France has rapidly grown to 19 donut shops across Paris and plans to add another 50 points of access as they enter the DFD channel in 2025. This franchise model is the most capital-efficient way for us to grow internationally, and so we've begun the process to evaluate refranchising certain international markets. We also expect to open in 2 to 4 new countries with franchise partners, including Brazil and Spain in 2025. Between all international and U.S. markets, we anticipate reaching more than 23,000 points of access by year-end. An important initiative this year is strengthening our performance-based culture. We have launched new incentive-based compensation in the field focused on results-oriented metrics, such as consumer satisfaction and materials efficiency. We're also investing in operations leadership and simplifying shop employee and manager roles to support our Krispy Kremers. I believe that delivering on these priorities in 2025 will result in a bigger and better Krispy Kreme. With that, I'll pass it over to Jeremiah.
Thanks, Josh. I'll cover our fourth quarter results, which, as Josh has mentioned, were impacted by the cybersecurity incident. Excluding the estimated impacts from the cyber incident, results were largely in line with our expectations. The incident affected business operations, including online ordering, materials replenishment, and labor planning. We estimate the incident impacted revenue for the quarter by $11 million, with an estimated adjusted EBITDA impact of $10 million, driven by the margin from lost sales and operational inefficiencies resulting in higher ingredient waste and elevated labor hours. Insurance is expected to offset a portion of these costs and losses, and we continue to believe this will not have a material impact on the long-term trajectory of the business. Today, systems are operational following great work from our teams, both internal and external, who work tirelessly to ensure that our shops are running and that our systems came back online safely and efficiently. Net revenue was $404 million for the fourth quarter, driven by Delivered Fresh Daily growth. We marked our first quarter with over $100 million in global Delivered Fresh Daily revenue, underscoring the value of our omnichannel strategy. Organic revenue grew 1.8%, despite an estimated 280 basis point headwind from the cybersecurity incident. Organic revenue was driven by global points of access growth of 24%. Adjusted EBITDA declined to $45.9 million, primarily linked to an estimated $10 million impact from the cyber incident, as well as the sale of a majority stake in Insomnia Cookies. Adjusted EBITDA margin was 11.4%, with an estimated 210 basis point impact from the incident. Turning to our U.S. segment results. Organic revenue declined 1.2%, primarily linked to an estimated 460 basis point impact from the cybersecurity incident. Adjusted EBITDA was $23.6 million, lowered by an estimated $10 million of the headwinds from the cyber incident and from the sale of a majority stake in Insomnia Cookies. Our DFD expansion strategy continues as points of access growth accelerated to 34% year over year, progressing with several major national accounts. Average revenue per door per week, or APD, was $631, down slightly from the prior year as expected, given the changing customer mix. For example, large-scale Walmart doors, which have an APD that is higher than the segment average, represent approximately 15% of our U.S. DFD doors, down from 19% in the year-ago period, despite net growth with Walmart in that time frame. Looking into 2025, we anticipate revenue growth as we expand our DFD network, partly dampened by consumer pressures. From a profitability perspective, we expect margin compression in the front half due to lingering impacts of the cybersecurity incident on labor and material management in Q1 specifically, and long-term business investments with revenue growth and hub-and-spoke efficiencies expected to deliver operating leverage in the second half. Within our equity-owned international markets, organic revenue grew 7.8% year over year, led by Canada and Japan. Points of access grew 14%, fueled by DFD revenue growth of 21% as we continue to execute against our hub-and-spoke strategy. Adjusted EBITDA was $25.7 million, with adjusted EBITDA margin down to 18.6%, largely due to continued pressure in the UK. As mentioned on the third quarter call, we have a new management team in the UK who have just completed their first quarter with the business. The team remains laser-focused, implementing plans to return this key market to profitable growth. The team are continuing to right-size the production network, work on core range, including strengthening original glazed, which is underrepresented in that market, in addition to piloting different price points and different channels to ensure value for the consumer. Elsewhere, markets such as Canada and Japan continue to deliver strong results driven by the OG donut, with both markets improving margins year over year, driven by strong consumer-centric execution. In our most profitable segment, market development, organic revenue declined 0.7% due to timing of equipment sales. Adjusted EBITDA margin improved again to 57.8%, linked to favorable sales mix and SG&A improvements. Adjusted earnings per share for the year was 11 cents, driven lower by depreciation and amortization as well as interest expense. We also estimate the 2024 cyber incident had a 4-cent impact to adjusted EPS. In 2024, we delivered positive operating cash flow. We also maintained a similar level of gross debt while reducing supply chain financing by $44 million. Leverage at year-end was also impacted by the cybersecurity incident. As we transform the business ahead of accelerating profitable growth in both the U.S. and a wider adoption of our capital-light expansion internationally, we expect to deliver the following results in 2025. Net revenue of $1.55 billion to $1.65 billion. Organic revenue growth of 5 to 7%. Adjusted EBITDA of $180 to $200 million. And adjusted earnings per share of between 4 cents and 8 cents. Providing some further insights into our financials in 2025, we anticipate that margins compress in the first half due to lingering impacts of the cybersecurity incident on labors and material management in Q1 specifically, and long-term business investments with revenue growth and hub-and-spoke efficiencies expected to deliver operating leverage in the second half. SG&A expenses remain flat as a % of revenue as the restructuring announced last year is offset by inflation and bonus accruals. Capital expenditures to track between 6 and 7% of net revenue, and interest expense is expected to be between $65 and $75 million due to higher interest rates, with $500 million of our long-term debt hedged. This all reflects a $3 to $5 million headwind to adjusted EBITDA from foreign exchange rates. With regards to the first quarter of 2025, we've seen consumer softness. We're also seeing an impact from weather in the Southeast and fires in California. Taking these into account alongside the divestiture of Insomnia Cookies, startup costs from our U.S. expansion, and the lingering cybersecurity impact in Q1, we expect the first quarter net revenue will be between $370 million and $390 million, with $25 to $30 million in adjusted EBITDA. I remain confident we are taking the right actions in 2025 to set the business up for long-term profitable growth and improve returns on capital.
Thanks, Jeremiah. In summary, our largest growth opportunities are profitable U.S. Deliver Fresh Daily expansion and the wider adoption of our capital-light international franchise model. In 2025, our transformation to a bigger and better Krispy Kreme continues with the clear business priorities we've shared today, namely spotlighting our core offerings, focusing on growing with national distribution partners, our expectation that we will soon award contracts to outsource U.S. logistics, the evaluation of refranchising certain international markets, and strengthening our performance-based culture. I look forward to our profitable growth in the years ahead. Operator, let's now open it up to Q&A, please.
We will now begin the question and answer session. In order to ask a question, press star, then the number 1 on your telephone keypad. We ask that you please ask one question with one follow-up. We'll take our first question from the line of Daniel Guglielmo with Capital One Securities. Please go ahead.
Hi, everyone. Thanks for taking my questions. On the OpEx line specifically, those expenses are in line with prior year without Insomnia Cookies, and understand that there's $3 million from the cybersecurity incident. But thinking for 2025, where are you expecting kind of OpEx expenses to go? Should we be modeling kind of flat to what we've kind of seen this quarter, taking into account seasonality, or just curious how you're thinking about that?
Yeah, thanks, Dan. I can take that question. Obviously, we're investing. Let me just come back to from a guide perspective with respect to OpEx, and in general, we are expecting to invest in things like operations leadership as we're building kind of performance culture and getting ready for a national rollout and footprint in the U.S., while also setting up the business for long-term growth by streaming our operations and focusing on making donuts by outsourcing logistics. Both of these things we do expect to pressure OpEx in the front half of the year and then start to leverage that in the back half of the year.
Great. Thank you. That's helpful. And then just as a follow-up to that, with kind of the DFD expansion into McDonald's, Target, Walmart, the larger names, what's kind of the process for thinking about existing maybe DFD locations that are less economical? How do you guys think about maybe kind of shutting down some of those if it's not kind of hitting the margin levels that you're expecting? Just want some color there, and even if you guys are doing that.
Yeah, hi Dan, thanks for the question. Yeah, it's important to start by saying that the strategy to make our fresh donuts available in more places with the national partners you reference, such as Walmart, Target, and Kroger, is working. And so, our expansion today is focused around those national partners. We're also bringing on indeed new ones, such as Costco, which I mentioned earlier in the call. With that in mind, we're making sure we're continuously optimizing the network. And that means, any lower performing doors, we can optimize as we go, make sure that the system is strong for the long term. We've talked a lot about a bigger and better Krispy Kreme. That means sustainable, efficient growth in the long term, profitable growth. And hence, we will take the opportunity for any smaller locations to optimize those as we grow.
We'll take our next question from the line of Brian Harbour at Morgan Stanley. Please go ahead.
Thanks. Good morning, guys. For the top line guide, you're talking about 5 to 7% organic growth. You're probably aware that you're kind of guiding, I think, below where the street is now for top line. So could you kind of just explain that? I don't know what the difference, international versus U.S. is. Are you expecting there to be more door rationalization as you're sort of adding some of the McDonald's doors? What exactly kind of drives that top line guide?
Hi, Brian. I think I'll start by talking about, the start of the year. It has been a choppy start of the year in our traditional retail locations in the U.S. There's those freezing temperatures and wildfires, but we also see the value-conscious consumer under pressure. I mean, that being said, the consumer remains highly engaged with the Krispy Kreme brand. We're an indulgent purchase for special occasions. I mentioned earlier that Valentine's was our biggest sales day ever, but we are finding that we need to put the spotlight on our beloved and affordable Original Glazed brand. So that is one of the key drivers, particularly as we start the year out.
Okay, understood. And just on the CapEx and free cash side, I think that the CapEx number you're saying was actually a little bit lower than you might have previously indicated, and correct me if I'm wrong. But I guess the broader question is sort of, the last couple of years you've burned about $75 million of cash. Last year, sort of Insomnia proceeds, helped kind of with that capital budget. Do you think this year will look similar? Do you think that some of the refranchising proceeds that you're, considering would sort of go to that capital budget for this year?
Yeah, thanks for the question, Brian. I think, I'd start with 2024. We're actually pretty pleased with the fact that we delivered positive operating cash flow, despite lowering the use of supply chain financing, which was a strategic decision that we've made to reduce our reliance on that. In addition, that kind of cyber pressuring EBITDA as we kind of exited the year. As you mentioned, we're committed to driving free cash flow when we look to transform the business to ensure we have the right capabilities long term. In 2025, we're focused on driving improved conversion of EBITDA to free cash flow, being even more discerning with our CapEx, as you mentioned, and reducing kind of the spend in that area, and all whilst working toward making improvements in working capital. I would expect your kind of question, the inorganic ways to drive operating cash flow through refranchising to be incremental to this, but our objective is to drive positive free cash flow in 2025.
It's worth adding as well, from an operational point of view, that as we prepare for this nationwide footprint in the U.S. and we expand with the national partners, we're finding more and more ways to leverage our existing capacity, whether it's because we've increased productivity at our existing hubs, or we're learning how to get the donuts out to the points of access better and better. So there is an opportunity, we think, going forward to invest a little less than we originally expected in the hubs, which means that we'll probably only build about 5 to 7 new hubs this year in the US, which is a little less than we had previously expected, reflecting the ability to leverage that existing capacity better.
Our next question comes from the line of Andrew Wolf with CL King. Please go ahead.
Good morning. I wanted to ask you about your business with McDonald's, just how 24 came out, versus internal expectations, top and bottom line, and what is kind of reflected, however specifically you can speak to it, in 2025, with any updates based on results.
Hi, Andrew. Yeah, we started the phased rollout of McDonald's just in October. We're already in actually 2,500 restaurants today. We're launching in New York just today. We expect to be in about 6,000 by the end of the year and 12,000 by the end of 2026. So that rollout's on track. It's important to understand as well that the phased nationwide rollout of McDonald's is part of a broader strategy to make our fresh donuts more accessible, as mentioned earlier, with Walmart, Target, Kroger, Costco, and others. So, all that being said, the feedback from McDonald's is very positive. They tell us it's working well, and we're working hard with them to maximize the opportunity, make sure that the launch goes well. And we've seen during the launch phase that with local marketing, the team at McDonald's is able to raise awareness, make sure that people know it's on the menu, driving very strong demand and no visible cannibalization of our other sales channels. Now, what we're doing now, it's early on in the rollout, we're making sure that we're working with them to maximize the opportunity during the whole rollout phase, even when that local marketing comes off, when that awareness drops, when it's not as visible on the menu, when naturally demand softens. We're making sure that we work with them to get all the way to the national rollout phase at the end of 2026, when we'd expect they would start putting on national marketing.
Okay, so that's sort of like the J curve, where initial demand's above sort of the steady state, which I think is typical, right? And has that been in line with expectations?
Well, the initial demand, when there's prominence on the menu board, is actually come in those first few weeks above. Then when that prominence comes off the menu board, there's no graphics, there's no other marketing. The donuts aren't actually visible to the customer. It's not like they're on the counter or anything. They're behind the back there. So the demand has dipped, actually a little lower than we expected. So right now we're focusing with them on how to make sure awareness is maintained during this local rollout phase whilst we wait to be nationally distributed. As I said, the feedback from them is very positive, and so the partnership continues to progress very well, and it continues to unlock for us expansion opportunities across the country. I mentioned Costco. It's a really big opportunity for us. Wouldn't have been possible without starting the McDonald's rollout. Target, which we just started in 2024, following the announcement of McDonald's, continues to be a big expansion driver in 2025. So it's part of an overall program to get our awesome fresh donuts out to more people.
Our next question comes from the line of Rahul Krotthapalli with JP Morgan. Please go ahead.
Good morning, guys. On the DFD door weekly sales being down 5% lower year on year, you did cite customer mix change as expected. I'm just curious to get more color on what drove this. Is the McDonald's doors realization a little lower than you expected, or anything else you can share there? And I have a follow-up.
No, thanks, Raul. And as you kind of mentioned, APD in the US, we're primarily driven by customer mix. As we continue to add customers in the US, some of our bigger footprint customers like Walmart, which make up a lower percentage of our total DFD footprint now compared to the same quarter last year, will pull down APD naturally, just given their higher kind of APDs. That's the primary driver.
And did you guys quantify the impact the cybersecurity incident had on the 25 EBITDA guidance?
We did not quantify the impact of cyber on the 2025 guidance. What I can tell you is operationally, things like labor management and materials management were still an issue as we started the year. And so we do expect that and have called that out in our Q1 guide that we provided this morning.
It is important to understand that as of today, thanks to the tremendous hard work of the team, our business operations are fully operational.
Our next question comes from the line of Bill Chappell with Truist Securities. Please go ahead.
Thanks. Good morning.
Hi, Bill.
Just maybe a clarification from an earlier question. If I look at your revenue for 2024, it was $1.7 billion, or sorry, if I take your revenue from last year and I do plus 5 to 7%, it gets me to $1.7 billion. And you're guiding $1.5 to $1.6 billion. So can you just break out how much of that offset is from Insomnia and how much of it is from, I assume, currency?
Yeah, thanks, Bill. It's a great question, and it's absolutely the right kind of pickup. The U.S. segment net revenue in particular was impacted, obviously, by the sale of Insomnia cookies, which is roughly about $70 million in revenue a quarter on that front. Foreign exchange is having roughly a $40 million impact on total net revenue for the year as well from an international business perspective.
Got it. So that's those two just get me back to your 5 to 7% organic growth.
You got it. Yeah.
Okay. Thanks. And then any way to do that on the bottom line in terms of just, again, you did 193 in EBITDA, you're going to 180 to 200 this year. How much of that is Insomnia and how much of it would be FX?
Yeah, on Insomnia, we generate roughly $8 million, or we used to generate roughly $8 million a quarter in EBITDA on Insomnia. So that will obviously come out in the front half. And we have called out a $3 to $5 million impact as a result of foreign exchange on the EBITDA line as well.
Our next question comes from the line of Brian Mullen with Piper Sandler. Please go ahead.
Hey, thanks. Just a question on the third-party logistics. In the prepared remarks, I believe you said you could have half the U.S. system by year-end. Just related to that, can you just give an example of the puts and takes from a P&L perspective? What expenses would go away? What new expenses would you have? And can you talk about whether or not there would be a net benefit to EBITDA as you see it once it's all in place?
Yeah, thanks, Brian. And we've begun to scale, obviously, to support DFD expansion in the U.S., including McDonald's, with our existing in-house model to start. In February, we're moved to the contract phase and remain engaged with multiple carriers to finalize contracts. While we go through this phase and into the rollout, we do expect some transition costs in moving to an outsourced model, so a bit of kind of EBITDA pressure. But we are targeting EBIT neutral. However, we're still in the negotiation phase, but expected costs are contemplated in our guide.
And the goal of getting to more than half the system, it's a big initiative. It's exciting for the teams in terms of giving us predictability in costs. We think that we'll get excellent service levels, just generally be a more streamlined set of operations. But all that's taken into account in the guide today. So, the puts and takes have been thought through.
Okay, thanks. And then follow up the question on international, the process to refranchise certain markets. There's not that many company-owned markets right now. So could you just give a sense are you amenable to looking at refranchising all of them, or are there some of them you'd like to continue owning for whatever your reasons are? Just any color on that and how long you think the process might take would be great.
Sure. We've learned that the best way to grow overseas is with local scaled master franchise partners, and we have strong and growing businesses in several international markets that we both own and our franchise. But what we think is the best way going forward, the fastest way of taking advantage of the opportunity, the most capital efficient way, is to evaluate refranchising the international markets that we own. There's the UK, Ireland, Australia, New Zealand, Japan, Mexico, Canada. That's the group that we own. We're evaluating all of those as an opportunity to do that. The most important thing is to find a really good partner with quality, proven operators. Uphold our brand standards, deploy the operating model that we talked through, the hub and spoke model, and then of course have a strong financial position. So we're still in the evaluation phase right now, Brian, but we'll provide updates as we have them regarding any particular market. But we're intent on doing this to make sure that we can focus most of our time on expanding with national US partners in the US, strengthening that US footprint in preparation for the nationwide rollout of those partners, and overall transforming Krispy Kreme into a bigger and better Krispy Kreme.
Our next question comes from the line of Jafar Mitsari with BNP Paribas. Please go ahead.
Hi, good morning. First question is on what you said about Q1. I just wanted to triple check I've heard correctly. I think you've indicated EBITDA of between 25 and 30 million in Q1. You've also given some indication on Insomnia quarterly EBITDA. So last year, Q1 EBITDA with Insomnia was 58 million. So am I correct if I assume you're effectively bearing the brunt of the impact in that Q1, and your full year guidance then implies there will be adjusted EBITDA growth year on year in Q2, Q3, Q4?
Hey, Jafar, I can take that question. Yeah, and I think, as we think about Q1 in particular and the quarter itself, there are really kind of four things driving year-over-year change. The first being the sale of majority stake in Insomnia Cookies. Second being the lingering impacts of the cybersecurity incident on labors and material management, which I had referenced. Third, we are incurring startup costs as we, invest in the U.S. expansion. And the fourth being some of the consumer pressures due to the adverse weather across the country. So when we think about Q1, it's going to be the most pressured on it. What I would say is we do expect sequential improvement as we go throughout the year, driven by the excess capacity we're tapping into with our points of access growth, driving hub and spoke efficiency. But it will be most pressured in Q1.
Super, thank you. And then on international refranchising, early days, as you said, but what's your very early view on the type of potential partners you could find? Do you expect to be discussing sales on a local country level, or do you think there could be regional players interested in taking on multiple countries? Specifically, a lot of US restaurant brands have listed franchisees. Do you think you could be considering conducting local IPOs for the OpCos, for example, and retaining the brand and the franchise, or do you think these businesses are too small for public markets?
Yeah, the way we have built, we have more than 30 franchise partners around the world that work very, very well. It's when they have the master franchise for that market, for that country, and can build out the full omni-channel model within the borders of that country. We've seen that in existing markets across South America, Middle East, and Asia, and indeed new markets like France, which we opened up recently, partnering with Columbus Cafe there, a national operator of great standing. Similarly, in Korea, we partner with Lotte, obviously a fantastic operator, well known within the country and very strong and well financed. And so we'll be looking at profiles like that, people who either have been involved or have an understanding of bringing in expertise, whilst of course having good financial backing to support what is a fast-growing brand. We wouldn't rule anything out. That's the point of an evaluation, but we're not expecting to be going out there IPOing the businesses. There's no immediate plans for that. It's more around finding the right partner to build sustainably because this is a growth model, and we have people approaching us across the world all the time to partner with us since we were able to communicate the clarity of our growth trajectory and demonstrate profitable, capital-efficient growth to them.
Our next question comes from the line of Jon Tower with Citi. Please go ahead.
Yeah, good morning. Thanks for taking the questions. Just real quick on clarification. I'm assuming this is the case, but just wanted to make sure. There's no refranchising contemplated in your guidance today, correct?
That is correct, John. Yeah.
Okay, great. Maybe if you could speak to, it sounds like in 2025, both in the U.S. and internationally, there's a pivot in terms of marketing the actual product more towards the OG and away from, maybe not even away from, but it sounds like you're putting more of a spotlight in the OG donut. I'm just curious to know why. Like, what exactly are you seeing that suggests that's the proper tack to take?
The original glazed donut, it's our most differentiated product. There's nothing quite like the experience of having a fresh original glazed donut, and even more so if you have one hot off the line. Indeed, we see no matter what channel people are purchasing our donuts in, if they've had a hot original glazed donut, their memory structure is such that they think of the time they had that, and so it really differentiates us against the competition. It's also our not only is it beloved, but it's our most affordable product, and we are conscious of the value-conscious consumer. We see particularly for large families and gatherings looking to buy more than a dozen that we want to bring value, and the original glaze can do that. And then finally, very practically, it's our easiest donut that we make. It's the core of what we do, more than half of our sales, so it's the highest margin as well. So not only is it iconic for the consumer, differentiating versus the competition, but the best way for us to sustainably, profitably grow the business in all our channels.
Got it. And maybe just one last follow-up on, you had mentioned that you're seeing some softness from a consumer demand standpoint. Can you maybe break that down across the channels? Are you seeing any one channel stand out in terms of where that weakness is coming from?
Well, we've consistently seen over the last couple of years, as we've deployed the strategy of bringing the donuts to more people, that where we're bringing the donuts to them, making it much more convenient for them in their lives, we've seen strong, sustained growth. And of course, we've been adding more and more points of access around the world. And so I mentioned on the call today that we grow more than 20% in the delivered fresh daily channel as the off-premise sales that I'm referencing in 2024, and achieved a milestone of $250 million of revenue in the year. So that's thanks to that expansion of Deliver Fresh Daily. We're also seeing the digital channel has been growing consistently. Obviously, there was some disruption in December from the cyber incident, but apart from that, that has been growing actually at a similar level over the last few quarters, more than 20%. What I was referencing today was where we're asking people to come to our traditional donut shops, come into the lobby, have the experience of the donut case. It's an amazing experience, and it's often triggered by that hot light original glazed, your earlier question, hence the importance of focusing on that in our strategy.
Again, to ask a question, press star 1 on your telephone keypad, and we'll take our next question from the line of David Palmer with Evercore ISI. Please go ahead.
Thanks. Good morning, guys. I wanted to ask you about that cyber impact. You estimated $10 million as a headwind to the fourth quarter. I would imagine estimating that would be even pretty difficult. I mean, can you make us understand how you calculated that? Like, what does that represent? Where did this shortfall come from? And then what was that drag? Now that it's sort of behind you, as you stand today, what do you think the drag has been for 1Q?
Thanks, David. I'll take that question. And the way I would think about it, we talked a little bit about the impact to online sales and ordering, which would roughly make up half of the impact that we saw in the fourth quarter. With respect to how you kind of quantify that, we actually didn't sell anything online for a number of weeks, and therefore that's a fairly easy one to kind of quantify. On the kind of labor and materials efficiency piece, we look historically at where kind of our adherence to schedule and labor hours are to estimate where and how inefficient we were during that time frame as well, which gives us pretty high kind of confidence and comfort that those were the impacts that we saw for the fourth quarter. We're not disclosing the impact on the first quarter specifically, but what I can tell you is we were back up and running from an e-com perspective, so less of an impact from lost sales, but continued to see the impact on efficiency until we had the back of shop systems up and running for the first few weeks in January.
And just to follow up on outsourcing with the logistics, what is going to be when is that fully going to be rolled out, and what's the impact to EBITDA and cash flow? I would assume that there'd be some CapEx implications as well, maybe on an annualized basis as you roll that out. Thanks.
So I think as Josh has mentioned, we expect to transition roughly half the fleet by the end of the year. With respect to the cost associated with that, as I mentioned, that we will incur some startup costs as we go through the transition, but do expect and are working toward a goal of EBIT neutral for the year. As you can imagine, there may be some actually cash benefit as a result of outsourcing as we kind of negotiate payment terms with vendors and those types of things versus paying our folks, on a regular basis. So we're still working through all that as we go through the contract phase where we are targeting effectively EBIT neutral is what we're saying.
And that will conclude our question and answer session. I'll turn the call back over to Josh Charlesworth for any closing comments.
Yeah, I'll just say thank you for your interest in Krispy Kreme today. Thank you to our Krispy Kremers for all the hard work you do every day. Our path forward is clear as we transform into a bigger and better Krispy Kreme, one that delivers profitable, capital-efficient growth in the long term. Thank you.
This concludes our call today. Thank you all for joining. You may now disconnect.
There we go. Thank you very much indeed. It's a fast-moving morning. There's the Krispy Kreme earnings. We're now going to go into a world premiere. It starts in 2 minutes from now. That will take you then to our next event. Excuse me. So we're very, very busy this morning. We've got Viper Energy coming up in half an hour as well. But before that, a world premiere from Vaz, part 2 of Archer. That's about to go live right now. So let me give you the link once again. I've just changed the time to suit it perfectly here. So we've got 1.5 minutes to go. So I would like to invite you all to click on this event. It's a world premiere. It's Archer Part 2 as we get ready for the EVTOL Hub and the event on Thursday. There it is. Okay, it's a very, very busy day. Plus, of course, we got Virgin Galactic earnings, NVIDIA earnings, Viper earnings, lots and lots of stuff as well today. So there is the world premiere. This is the event. It goes live in 60 seconds. As we end this stream, it'll automatically take you there. Watch this one. This is a live world premiere, never seen before. This is the first one. This is part 2 of the EVTOL Hub earnings for Archer. It goes live right now in just 60 seconds from now. I hope everyone joins in with this live premiere. I will be in the chat with you. I'll be talking to you live so we can discuss together. And at the moment that countdown begins, I will end this stream and join you. So in the chat, here is the link. It's also pinned to the top. It'll automatically take you there. Landbridge earnings as well is February the 26th. Depends what time. I'm trying to do, I've already got 2 earnings for tomorrow. Let me just check. Dates keep moving with these companies. Let me just check Landbridge. Bridge. What time are they doing it? Because I've got 2 after hours tomorrow night already because dates moved. No, this is moved to March. Landbridge has moved to March 5th. March 5th. So that is now moved. So I can update that as well. March 5, Landbridge. So I shall take that out of there. And we've got just a few seconds to go before that begins. March 5th. That will go down there. March 5th. Yeah, available March 5th. Landbridge has moved. That actually helps. So there we go. You confirmed at the time, Martyn Lucas, Landbridge. Yes, I confirmed it. Yeah, but it's moved to March the 5th. Iberian Wolf. Okay, here is the event. It's about to begin any second now. When the clock starts, I shall end the stream. Are you ready? The link is in the chat. I'll be back very, very shortly. Virgin Galactic updates, information on NVIDIA. We've got the NVIDIA earnings. We've got the Viper Energy earnings in about half an hour. We've got the NVIDIA, Virgin Galactic. Yes, I think that's it for now. Right, okay. All right, let me put this in the chat for you. Once again, join me there now. As I end the stream, it'll take you directly there. There you go. Or click on the pin in the chat. That's it from me. It's a very, very busy morning, back-to-back events, and we're on it. Okay, see you back in a few minutes. After this, the Viper Energy earnings, and then more throughout the day. Whew. Get ready. Till next time, as always, take care of yourselves and each other.